Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. Very good morning. I'm Kelvin here, and happy Friday. So today will be the 24th of October 2025. So as usual, before I jump straight into today's gist of the Daily Dose, let's have a quick look at the disclaimer first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. Okay, so as usual, before we jump straight into today's full suite of the daily dose, which consists of the intraday technical outlook on all the 12 broad-based cross-asset classes across the global markets. Let's have a recap what has taken shape yesterday and as well as in today's early Asia session before the start of our daily dose at 11 a.m. Singapore time in terms of the relevant economic data / news flow and their impact on the broad-based movement of the on the intraday movement of the broad-based cross-asset classes. So yesterday, there is a pertaining to a trade-related news flow. Pertaining the trade relationship between US and China, which came into everybody's surprise. So what do I say? So White House, I mean the official channel of the U.S. government mouthpiece. So the White House press, we call it release, the official press release has confirmed that President Trump and China presidency, they will meet together on the sidelines on next Thursday at the APEC summit. All right, over here. So that is confirmed on the 30th of October, all right, during the sidelines of the APEC summit to be held in South Korea. What's very interesting over here is that we know that in the last 2 or 3 weeks or so, there has been this ongoing tit for tat rhetoric between China and US, trying to play this brinkmanship to see which has a better upper hand in the very similar to the stakes of poker, each one trying to see the respective trump card, as we know that the up and coming trade truce deal between these two sides is coming pretty soon on the 10th of November, that was previously struck between US Treasury Scott Bessent and China Vice Premier He Lifeng, which is the point man from the China side of the delegation to actually have these trade negotiation talks between US and China. And you know that also Trump was 3 Fridays ago, he actually launched this very hawkish rhetoric towards China, saying that he will impose additional 100% tariffs on China products because he disliked China rare earth so-called export controls over here. And what's interesting over here is that in order to actually dose this fire, US Treasury Secretary Scott Bessent saying that he will head to MY this weekend, which be this coming Sunday, on the ASEAN summit to be held in Colombo, to meet with his counterpart, which is Vice Premier He Lifeng, to actually iron out the differences. And market has viewed this as a pathway to cement the potential confirmed meetup between Xi and Trump that to come in later at the end of this month. So what market initially was expecting is for this meetup in the weekend in Colombo between US Treasury Secretary Bessent and China Vice Premier He Lifeng to iron up some thorny issue and to lay the groundwork to a more confirmed firm up date of meetup between Xi and Trump to be held at the end of this month. So that was the earlier guidance that is being portrayed by US and China to guide the market across this way. But so what's interesting over here is that US jumped ahead of the gun and confirmed the meetup with Xi and Trump before US Treasury Secretary Bessent and China Vice Premier He Lifeng meet this weekend over at the sidelines of the ASEAN summit to be held in Colombo on this Sunday. All right. So very interesting, I would say a theater play that is going on. So bear in mind that anything that could come out over the weekend again, if Trump is not happy, he may start to sound very rhetoric if that meet up between Treasury Secretary Bissett and He Lingfeng doesn't turn well as intended. But market so far continues to rejoice in a risk on behavior. All right. So what do I mean by this? So if you were to look at the major US stock indices, but all of them rallied as intended. So those who followed my daily dose on the start of this week, we are actually expecting the start of a short-term bullish trend for the major US stock indices. Whatever sell-off that took shape on 2 Fridays ago, that causes that drastic Friday sell-off 2 Fridays ago, about 2.5 weeks ago, I would say, due to that Trump threat. All these are just corrective decline noises, but volatility is high in the last 2 weeks or so, and the market has started to move up above their 20-day moving averages. That means what we're referring to is a major stock indices. So yesterday, the market rallied as it tended to be, and Nasdaq 100 was my chart of the day yesterday. So later I'll go back to share with you what are the latest levels to watch. So the Nasdaq 100 also rallied accordingly. Within our expectation. So the best performer is still the small cap space. So I do mention in a couple of weeks back and in some of my reports are in the OAP Trader Tab blog, small cap is one of the potential outperformer that is basking on the limelight of a much more dovish Fed that is coming into play. So later I'll share with you guys about the Fed monetary policy guidance or potential outcome as implied by the CME Fed Watch 2 ahead of today's important data release, which is very surprisingly the CPI data. So later I'll show you why the CPI data is very important, okay, in the current context. Okay, so now the Russell 2000 rally as expected 1.27%. We call it surpassing the gains that is being seen in the other three major stock US indices, the Dow Jones 0.3%, the Nasdaq 100 0.88%, and the SPX 500 0.58%. And what's also supporting the rally on the US stock market yesterday was another positive AI optimism, high productivity team play coming back into the picture, where Amazon yesterday launches a new AI shopping tool within its we call it product suite to actually help indecisive shopper to target their desired product, okay, over in their we call it their app over here. So it's called help me to decide, that recommends a specific product when shoppers feeling overwhelmed with options. So that created a bit of positive AI team play back into the market. So if you look at the heat map of the S&P 500 over here, very quickly, let me share with you guys. All right. Okay, so this is the heat map of the S&P 500. So NVIDIA, the semiconductor, we call it sector, which is AI optimism, or it has been in the last 2 years, also gain from this indirect positive news flow from Amazon after Amazon included this AI featured in their product suite, which potentially could entice customer to spend more, in a way also drive revenue for this AI related semiconductor chips, which is semiconductor sector, which is very much an important component of this AI high productivity team play that has been driving the bull run in the US stock market, especially very much pronounced in the last 2 years. So NVIDIA gained by 1% over here, followed by a slew of other top gainers like AMD up by 2%, Micron up by 4%, and Broadcom up by 1.2%. Amazon for sure up by 1.44%, and Tesla managed to recover after 2 days of slide due to their lackluster earnings per share results that was out, which I shared with you yesterday. All right, over here. So another positive news flow that is also seeping through the Asia stock market today over here is especially the China related slash Hang Seng indices, is that the Hang Seng now is up 0.5%. The Hang Seng Tech, the one that's centered on China big tech stock, is up by more, by almost 1%, being a high beta play. And the CSI 300, which is the benchmark of the China A-shares market, that comprises both the big cap stocks of the China Shanghai Stock Exchange and the China Shenzhen Exchange, up by 0.7%, driven by this news flow coming out from the end of the fourth preliminary session. It's a very important session being held by top China policymaker to decide the next 5 year of economic growth path for China over here. So at the end of this session yesterday, the local news from the local news press, they actually released a communique released on Thursday after the 4-year conclave of the Communist Party Central Committee meeting hours here. So basically, they actually vote to enhance technological self-reliance and grow the domestic market in the next 5 year over here. And so basically, grow the domestic market, that means i.e. indirectly having the consumption, we call it factor, to potentially have a much more significant, we call it a share in driving Chinese economic growth away from the export factor over here. So net overall, it actually created a positive feedback loop into the Hong Kong / China stock market. And also given the fact that the positiveness of this two, we call it a news flow that is coming out from US and China, that created a positive feedback loop into the rest of other Asia Pacific benchmark stock index, where the Nikkei 225 rallied as expected as well. That was featured as our chart of the day previously on Wednesday. All right, so later I'll share with you what the latest price level to watch for the Nikkei 225. Rally up by 1.35%, and the rest of other Asia Pacific benchmark stock indices also continue to bask in the limelight. The Kospi 200 up 2%. The only outlier will be the Taiwan TAIEX, down by negative 0.4. Sorry, it's not down actually. In fact, TAIEX is closed today for a public holiday. Pardon me. So these was yesterday prices. So STI up by 0.4%, and the rest of the other ASEAN stock market also very positive. As we're speaking right now, Malaysia is up. The KLCI index is up 0.2%. Thailand up 0.9%, and for the ASX 200 as well, profit taking, but not a sell off, down by negative 0.2% as we're speaking right now. So that's for the stock market perspective. Now let's move on to the FX market. So FX market, the up layer over here will be the strength of the dollar against the Japanese yen. So later I'll share with you why, because from a very technical perspective, where the dollar yen was being featured as our chart of the day yesterday after breaking above that 51.70 level. So dollar yen now is trading at 52.89 as it's en route towards a key resistance level. Later I'll share with you guys. And the dollar is a very important price to watch right now, because we are now heading to a very all important US CPI data that is going to be out later in today's session. So the dollar yen is the outlier right now. We could see from a 5-day rolling performance is up by 1.33%. And if you look at the last 24 hour from a rolling we call it the last 24 hour, is up by 0.22%. All right, over here. So the reason why the dollar yen continues to rally in today's Asia session by another additional of 35 pips or 0.2% is because of the Japan CPI data. So like I mentioned, Japan CPI data is a bit interesting, because for Japan they have two sets of CPI data that's important. One is the core CPI data, and one is the core CPI data. So let me share with you what do I mean by that. So if you look at the core CPI rate, that's only excluding food, doesn't exclude energy. So that actually came in within expectation at 2.9%, and also above the previous August month print of 2.7% over here. All right, so previously August it was at 2.7%, it came in at 2.9. But if you strip out of energy, that means the core inflation. So the core inflation is a much more we call it important metrics that BOJ watches. All right, because energy could be pretty much volatile as well. So they strip off the energy prices, taking into account of services inflation over here. So that actually came below the previous month print of 3.3%, and trading economics forecast at 3.2%. So it came in below what trading economics has forecasted, and also came in below the previous month, which is the September print of 3.3%. 3.3%, pardon me, at 3% year on year. So if you look at the trend of the core CPI data, it starts to slow down slightly since August. All right, so previously it was at July 3.4, and for the 2 consecutive months for August and September, it starts to slow down. Okay, the rate of acceleration starts to slow down, but it's still hovering above that 2% BOJ target for the last 1.5 years or so for the core CPI. So if you look at the 10-year trend over here, is still holding above that 2% target. Okay, since after the breach of it on October 2022, so that's close to about what 3 years over here. So yes, there's a slight outlier deep down below 1.9 in July 2004 before going back up in August 2024 at 2% again. So net overall, the longer term trend is still intact for the core CPI data to remain above that 2% target that BOJ desired in order to actually move away from their ultra easy monetary policy. So today's push up in the dollar yen is more likely due to short-term momentum play, taking advantage of this slowdown in the rate of growth on from a month on month, from a perspective of the very short-term picture from the trend of August to September over here. So, but the longer term fundamentals picture are still supporting a rather firm, we call it a Japan inflation trend that is hovering above that 2% target that BOJ intended, and also the rate hike potentially could come at the end of December, but not this month, or early January over here. So that could potentially down the road prevent the dollar yen from spiking up beyond the major resistance of 154. Later I'll share you guys what's the major resistance level again. All right, so that's for the FX market over here. Okay, so yesterday gold continues to stabilize. That's been our expectation as well. So if you look at gold price over here very quickly, let me share with you where's the price of gold. All right, so this is the daily chart of gold. So yes, gold, we see that a steep sell-off due to stop loss level being triggered on Tuesday, but managed to survive at the medium-term pivotal support of 4,056/4,000. And what's interesting is that it managed to survive at the 20-day moving average, which more or less indicate that the mean reversion decline has paused. And how it paused in the last 2 sessions, it formed a bullish hammer candlestick on Wednesday and as well as Thursday, indicating a potential bullish reversal is at play. All right, so later I'll share with you what are the key levels to look out for today on spot gold XAU/USD. All right, so with that, let us now proceed to the second segment of the daily dose, which we cover all the intraday technical outlook on the 12 broad-based asset classes. Let me expand my screen. All right, so let's start with the FX market first. All right, so before we start on the FX market, on the individual pair, it's good to take a look at where is the dollar index doing. So the dollar index continues to be trapped inside this long, I would say 4-month plus of sideways movement, evolving within this medium-term symmetrical triangle range configuration, as depicted by these 2 gray lines over here. All right, since the low of 1st of July. And previously, it did a bearish reaction of the upper limit of this potential ongoing medium-term symmetrical triangle range configuration on 9th of October before shaping that rebound since last Friday. And now it's fast approaching the resistance level of 99.40 again. Potentially it could be a bit of volatile movement today. That means i.e. it could be a spike up, then thereafter there's a bearish reaction taking shape again in light of that CPI data that's going to potentially draw lots of downside and upside volatile movement, given that it's a key risk data that so far only this official data is being reduced in the midst of this ongoing 20 plus days of government shutdown. So the rest of the other data like retail sales that's being compiled by the statistical agency of US does not remove. Then you got to question ourselves why CPI data is being used to be pushed out for a release, not the other rest of the data, ahead of the US Federal Reserve meeting that is going to be held on next week. the following week, that means next week over here. So before we take a look of this over here, let me share with you guys what I'm expecting on the euro dollar. So for the euro dollar, I'm expecting a sideways movement for now, okay, a sideways move for now, but I'm watching very closely the upper limit of this 116.25. All right, in terms of fractal analysis, it tends to be more bullish than bearish at this juncture. Why? Because if you look at these two price action over here, it's forming a very similar fractal as compared to this fractal on the 10th of October and 14th of October before it shaped a short-term push-up. So it could be also potentially doing this same characteristic again before breaking above the 116.25. All right, so hence I'm more inclined towards the bullish side of the story rather than the bearish side of the story for the euro dollar at this juncture. So if you were to look at the Fibo retracement where it pauses in on Wednesday and Thursday, okay, let me put the magnetic field up again to take into the high and low. It pauses at this 76.4% Fibo retracement. Right, very interesting. So we have fractal Fibo retracement acting as a support before this bullish fractal scenario is being formed. So neutral for now first at 116.25, 115.80, but I'll be on the lookout for a potential bullish breakout. So if we have an hourly close above 116.25, potentially there could be a minor bullish breakout in play, taking us up higher on the euro dollar towards the next intermediate resistance at 116.77 for today. All right. However, if you start to see a price reversing downwards at 115.80, I'll be on the lookout for another slide, but this time round will be exposing the medium-term pivotal support at 115.30. So 115.30 is a very key support level to watch as well. So if you look at 115.30, that will be on my daily chart over here, 115.30, which is the former minus swing high of 22nd of April, and also the lower limit of this median ascending channel support level running in at 115.30 as well over here, right, and a bunch of congestion area that has previously been a support since 6th of August. All right, so this will be a medium-term pivotal support. So what do I mean by this? If the price action break down below 115.80, potentially maximum we could see for that downside move will be at 115.30 for now, because there is a medium-term pivotal support that I got to pay respect to. All right, so that's for the euro dollar. So very quickly on the sterling dollar as well. So the sterling dollar on Wednesday, it was very on Tuesday and Wednesday, on the start of Tuesday, since the start of Tuesday was very weak due to rather we call it a tame CPI data up from UK over here. So that being said, I will have a neutrality stance for now. So neutral between this 133.10 and the upper limit at 133.90 over here for now over here. So if we start to see a bullish break above 133.90, then potentially we could start to see a bullish exit from of the sterling dollar to end this potential minor slide that has taken shape since 17th of October this year, to take us up higher towards the next resistance zone in short term at 134.40, 134.65, with so confluence with the downward sloping 50-day moving average. So that's for the sterling dollar. Next up will be the Asia Pacific currency, starting with the Aussie dollar. So the Aussie dollar managed to bounce off from the 64.65, 64.40 short-term pivotal support level that we mentioned earlier on Tuesday, but he has been trading in this sideways range configuration. So in this sideways range configuration, what's interesting over here is that the hourly RSI continues to shape a series of higher low, indicating a potential, we call it build-up of short-term bullish momentum. So given the positive element or positive price action that's been depicted by the hourly RSI, as explained earlier for you guys, we will still maintain that bullish bias, but I do not want to tighten my pivotal support level to be so tight over here, to be as tight as this area here, just in case of any whipsaw, because of this ongoing impending key US CPI data that will be out later in the US session. So I'll still keep it rather wide at 64.65, 64.40 short-term pivotal, short-term pivotal support level over here. So the upside trigger level will be at 65.30. Very clearly, this is upper limit of this ongoing sideways range configuration that is been taking shape, but it seems to be much more of a bullish range configuration given the series of higher low that has been formed, and also with the potential momentum build up that is being expressed by the price action. Positive momentum build up that's being expressed by the price action of the hourly RSI. So a clearance above 65.30 will potentially take us up higher towards the next intermediate resistance at 65.75. Only a bearish breakdown below 64.65/64.40 will negate this bullish tone to see another choppy decline to test the medium-term pivotal support area and also the key 200-day moving average at 64.15, 64 figure level. And this level is very key. Why? Because it's also the ongoing medium-term expanding range configuration support level that has been in place since the low of 23rd of April 2025. All right, so that's for the Aussie dollar. So now next up will be the outlier, the dollar yen. So before I go on the hourly chart of the dollar yen, so dollar yen, the keynote to look out for will be the 154 resistance level. That's the major resistance level over here. So once price action reach to this major resistance level, which is very much according to the timing wise, because the US CPI data has some more hours more to go over here. So upon reaching this data, I would like to see high volatility that is taking shape, but with exhaustion candle that is being formed at the end of today's US session, that could cement another potential multi-day decline heading back towards the lower part of the range, which is the bunch of 50-day and the 200-day moving average over here at the 149, 1780 level. All right, over here. Okay, so that's for the dollar yen. So why this 154, pardon me, why this 154.50 is very important, because this is the ongoing major descending trend line that managed to cap previous significant rally since the major swing high area of 3rd of July 2024, and this swing high area was being formed due to at that point in time of BOJ intervention at the instruction of the Ministry of Finance to sell the dollar and buy back the yen right over here. So that created a kind of a psychological impact on the market, on why this 154.50 is a very important level to watch. Okay, so now, but for a short-term basis, price action still remains positive over here. So that's the hourly chart. So on the hourly chart over here, we do not see any exhaustion yet on the hourly RSI. Over here, the hourly RSI hasn't even hit the overbought level and continues to be remains on support by this parallel ascending trend line as well over here. So that hasn't hit the overbought level yet. So i.e. there could be some more residual movement to move up over here. All right, so we are also in the process of doing a last fifth wave of a minor 5-wave up from the low of 17th of October over here, with the fifth wave target at 0.618 and 0.764, slightly below the 154.50 major resistance level. So I would actually have a rather tight pivotal support for today at the 152 figure level, which is the minor range top of 21st of October to 22nd of October, taken out yesterday. So as long as this 152 short-term pivotal resistance hold, we will still maintain a bullish bias, but this bullish bias will be a more of a residual push up to complete this minor fifth wave of this minor impulsive up move that has been in place since 17th of October before another potential bearish reversal take shape on a minor scale. So watching very closely the 153.65, 153.90 level. So once it reach this level, be more cautious on the bullish side of the story. Okay, so that also gels down in line with that potential bullish breakout on the euro dollar as well that may take shape later in the European session, or even during the onset of the release of the US CPI data thereafter. All right. So however, if we start to see a price breakdown below 152, then we'll start to see more pronounced bearish mean reversion play coming into play of the dollar yen within that messy medium term range configuration that is still in place since the start of April this year. Next support level to watch will be 151.50, 151 figure level. maximum 150.35, which correspond to the rising 20-day moving average. So that's the potential outlook and the key levels to look out for the dollar yen. So do bear in mind over here. So now that sum up the excuse me. That's let me drink some water because of my throat. Okay, that sum up the intraday technical outlook on the four major US dollar pair. Now let us proceed to the major stock indices. All right, starting with the Hong Kong 33 over here. So the Hong Kong 33, what you could see over here, yeah, it managed to bounce off from this level here at 25.47, 25,047, and also there is a minor ascending trend line that is now being formed since the low of since that sell off of 10th of October over here. So this is that so-called Trump trade tariffs induced rhetoric sell offer. Then thereafter, it been trading in this rather choppy sideways range configuration with very high volatility over here, and price action now has started to surpass above the 50-day moving average, with the first support level to watch at 25,900, which is the 50-day moving average right now. So I don't want to tighten my short-term pivotal support to be very tight. So I'll use this swing low area that's being formed on Thursday, and also very close to this minor ascending trend line right now at 25,470. So using a rather wide short-term pivotal support at 25,470, given the nature of his rather wild swing in the last 2 or 3 sessions, to have a bullish bias over here. So first resistance level to watch will be this resistance zone here, which is very close to that high of Tuesday, and as well as that swing high on last Friday, not last Friday, 2 Fridays ago, which is the 10th of October, where before the Trump tweet on that 100% additional tariff on China product. So in order for the boost to gain traction, for sure, it got to surpass this important resistance level that take into account of the previous key risk event that has taken shape on the 10th of October at 26,450, 26,570. Above this level, potentially seek out a higher intermediate resistance level to push higher at 26,935 in the first step. Only a bearish breakdown below 25,470 will invalidate today's bullish bias view to seek out another slide towards the 25,140 that managed to survive after that support on the gap support that was formed on Monday. All right, over here, the previous 2 Monday or 13th of October. So only a bearish breakdown below 25,140 will see a much more deeper minor corrective pullback to expose 24,820 in first step. That is the 28th of August 2025 minor swing low. So that's for the Hong Kong 33. Next up will be the Japan 225. So Japan 225 continues to be in a bullish trend for sure. So I do mention that this is my key pivotal support zone to watch, which price action did that bullish reversal as intended. So Japan 225 was our chart of the day previously that we featured on Wednesday. Yeah, on Wednesday, correct. So for sure, this level remains the same level to watch out for. This one is going to be a first key resistance level for the boost to surpass. Why? Because of that bearish reaction on 22nd of October. Previously, I highlighted as well. 49,560 did have a proper bullish breakout on the intraday push. So, in order to have a proper return of this, or to increase the odds that this is indeed the start of a bullish impulsive up move, totally erasing off that minor corrective decline from 21st of October all the way down to yesterday's minor swing low, it got to have an hourly close above 49,560. So breaking out above this level potentially could take us up higher to fresh all-time high within this minor ascending channel that is been in play since the low of 10th of October. All right, over here, 50,090 / 50,220 will be the next resistance level to watch. Above it, potentially seek out 50,860, 51,030 in the days ahead. Only a bearish breakdown below 48,845, 48,440 will invalidate today's bullish bias view to kickstart another round of minor corrective decline for this minor corrective leg to extend further to the downside from the high of 21st of October. That's a fresh all-time high at the moment, to seek out the next support level at 47,260, which is all a very important support level. Why? Because that confluence with the rising 20-day moving average and the minor swing low area of 17th of October. So that's for the Japan 225. All right. Next will be the Germany 30 representing the German DAX. So the Germany 30 and German DAX also managed to state that bounce over here right from the 50-day moving average, a bit of a whipsaw around that previous short-term pivotal support that I highlighted on Tuesday. So I will tolerate a bit of excess over here using the minor swing low of Thursday or Wednesday US session as my pivotal support now, a slightly adjusted one downwards at 23,995. So right now is attempting to actually surpass above the first resistance level, 24,260, which is the 20-day moving average. So given the fact that the European market hasn't opened yet, so I need to have a clear break above 24,260 to increase the odds for it to actually seek a higher high to test the next intermediate resistance at 24,480 in the first step. Only a bearish breakdown below 23,995 will see another choppy corrective decline sequence, exposing the next key intermediate support level at 23,790, 23,710, which confluence with also the potential lower limit of this ongoing minor ascending channel that has been in place since 17th of September. All right, over here. So that's for the Germany 30. Next up will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30 managed to bounce, reverse off, and start to form a higher high and break above the first resistance level at 46,680. So this will be my near-term support level to watch it any bounce. So I don't want to tighten it, my pivotal support to be so tight at 46,680 for today, unless we have hourly breakout above the next resistance level at the intermediate resistance level at 46,920. So I will have the pivotal support right exactly at the 20-day moving average that managed to find support after that sell off on Wednesday, after that earlier sell off on Wednesday US session over here. All right, so this drastic sell off over here. So this will be my pivotal support level for now, 46,425. Maintain the ongoing bullish reversal, bullish recovery scenario for the US Wall Street 30, now evolving within this minor ascending channel that has been in place since that 10th of October Trump-induced sell-off. All right, so next resistance level to watch will be at 47,610, which is the current all-time high that has been tested on this Tuesday. Above it, seek out another higher fresh all-time high defined by earlier by a Fibo extension level, and now the upper limit of this ongoing minor ascending channel, which is at 47,340, 47,410. Only a bearish breakdown below 46,425 will invalidate this bullish reversal, bullish recovery scenario to induce another choppy minor corrective decline back into the play to seek out a the price push down towards the lower limit of this minor ascending channel. The next support level to watch will be 45,930, which is also confluence with the rising 50-day moving average. So that's for the US Wall Street 30. All right, next up will be the SPX 500, also trading within this minor ascending channel now from the low of 17th of October, and also surpass above the first resistance level that we highlighted yesterday at 6,720. So with that, I don't want to tighten my pivotal support level to 6,720 today, unless we have an hourly close above the current all-time high area at 6,770. So if you have an hourly close data above 6,770, then I will tighten my pivotal support to 6,720. So for now, pivotal support remains at 6,670, which is the minor swing low that was formed on Wednesday US session, 6,670. Maintain this ongoing bullish recovery, bullish reversal scenario to seek out the next resistance level at 6,800, 6,820. Above it, potentially 6,850 coming in next, which is a Fibo extension cluster, as price action going to trade higher towards the upper limit of this ongoing minor ascending channel drawn from the low of 17th of October. Only a bearish breakdown below 6,670 will invalidate this bullish reversal, bullish recovery scenario to see a choppy minor corrective decline sequence coming in again on the SPX 500, seeking out the next intermediate support level at 6,580, 6,570, which also confluence with the rising 50-day moving average. Next up will be the Nasdaq 100. So the Nasdaq 100 also managed to surpass our first resistance level yesterday at 25,000 level. So no change. We will have the resistance support, pivotal support at the 24,000. Okay, let me push it down. 24,785, 24,680 level, taking into account of the minor swing low of uh, this Wednesday US session low, and also the Nasdaq 100 is now evolving within a minor ascending channel from the low of 17th of October. So unless we have an hourly close above the current all-time high that is being resisted at Tuesday and resisted again on Wednesday at 25,225, then we will tighten my pivotal support to 25,000. So the next level to watch out for as it continues in this potential bullish recovery, bullish reversal scenario on the Nasdaq 100 will be 25,370, followed by 25,590, 25,640 in the days ahead, which is a FIBO extension cluster, now confluencing with this upper limit of this newly formed minor ascending channel that has been in place since 17th of October. Only a bearish breakdown below 24,680 that will invalidate the bullish reversal scenario to see another choppy corrective decline heading down lower towards 24,565. A breakdown below it exposes the next critical near-term support level at 24,290 that managed to survive on 14th of October, 17th of October, and also confluencing now with the rising 50-day moving average that managed to keep that previous drastic intraday sell-off induced by that Trump trade tariff tantrum earlier on 10th of October. All right, so that's for the Nasdaq 100. Also sum up all the intraday technical outlook on the major stock indices. So right now, let us move on towards the commodities market. I will share with gold XAU/USD. So gold XAU managed to survive right exactly at our pivotal support zone that we highlighted earlier on Tuesday, which is 4,056/4,000, the medium-term pivotal support. So I share with you the daily chart still remains positive, but that two bullish hammer reversal candlestick that is being formed on Tuesday and as well on Wednesday and as well as Thursday. So we continue to play that bullish bias for today on gold XAU/USD to maintain it. Pivotal support will be still no change. I don't want to tighten my pivotal support to be so tight to be that intermediate support level over here. Okay, at 4,090 on a push so tight. So I still maintain this wider zone of a wider level at 4,056, 4,000 level. First resistance level to watch will be 4,003. So this is a very important level. Why? Because upon breaking down this level at 4,003, we see that downside as cascading down towards the downside over here. So a clearance above 4,003 on the upside with an hourly close above it will increase the odds of the start of a new bullish impulsive upmove sequence to seek out the next resistance level in first step at 42.67 for today. All right, next will be a bearish breakdown below the 4,000 level. So if you break down below the 4,000 level, that's a very important level because that will kickstart a potential multi-week corrective decline sequence, possibly to expose the next support level in first step 3,943, 3,927, followed by this 3,895, 3,864 over here. All right, so that's for the gold XAU/USD. So lastly will be the West Texas crude oil. So West Texas crude oil on a daily chart basis, it managed to rally yesterday at 4% after the earlier gain of 3%. All right, so two days of tremendous intraday rally driven by that brinkmanship play coming out from US, where US White House trade kind of a sanction, placing further sanction on Russia oil supply, asking Putin to be on the table, the negotiation table, to end that 3-year war with Ukraine. But one interesting over here is that it already now reached the 50-day moving average, I think, as a resistance level. And previously, this 50-day moving average managed to cap previous bounces since 2nd of September and also on the 26th of September. And what's interesting now, if you look at the hourly time frame chart on the West Texas crude oil, upon testing the 50-day moving average, the hourly RSI has started to shape a bearish divergence as well. Notice there's this bearish divergence over here. Right, price higher high, but RSI bearish divergence, lower high, and it start to exit. It has really exited from the overbought level, indicating near-term potential price weakness as the price has already hit the 50-day moving average, indicating that whatever rally that has taken shape, it could be a potential counter trend rally within a medium-term downtrend, and this counter trend rally has really hit a terminal point where a potential minor bearish reversal could take shape, at least in the first step. So with this bearish element that I explained to you guys, I'll be using 63 figure level as my short-term pivotal resistance level for today, very close, slightly above the 50-day moving average, which is also the minor swing high area of 8th of October and 9th of October. First support level to watch will be the 20-day moving average over here at 60.55. A breakdown below 60.55 potentially take us down lower towards 59.15, maximum 57.90 for today. Only a bullish breakout above 63 figure level will see the mean reversion rebound sequence extending further towards the upside towards 64.55, maximum 65.70, which confluence with the key downward sloping 200-day moving average. All right, so that sum up the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for? And as well, later I'll share with you guys the CME Fed Watch 2. What is the Fed Funds futures traders are pricing ahead of today's key US CPI data, and also ahead of next week FOMC meeting. All right, so let's take a look at the economic calendar. What are the key data to look out for today, other than the key US CPI data that is very interestingly being forced to produce despite the ongoing US government shutdown. So at the start of the European session today at 2 p.m. Singapore time, we have retail sales that is out for UK that could potentially influence the movement of the sterling crosses and the sterling the sterling dollar and the sterling crosses. Pardon me. Market expectation is a slight dip to 0.6% year on year for the month of September from the previous print of 0.7% that was printed in August. Then thereafter, we have the Eurozone, we call it a flash CPI, a flash manufacturing PMI data and services PMI data at 3:30 p.m. The Germany will be out first over here. So market participants will be looking at whether there will be a recovery in the manufacturing PMI data, because manufacturing PMI data in Germany has been slowly on the uptick over here. All right, so if we go to the trend, okay, it's slowly, okay, let's look at the 3-year trend. It's been slowly reversing upwards over here. So anything that is above 50 will be considered as expansion. Yes, it's still below 50, but the rate of deceleration has starts to reduce significantly in the last 3 to 4 months. So market participants will start to see whether this manufacturing PI is able to inch up towards the 50 level. So market participant is expecting no change at 49.5 from 49.5 that was previously printed in the month of September. So this potential print could influence the euro dollar, the euro crosses, and as well as the Germany 30 CFD index. Then we also have the services PMI data. So services not so important because we know that in Europe, especially in Germany, is still reliant on the manufacturing sector to drive the growth. So services PMI market expecting a slight dip to 51 from 51.5 that was printed in the previous month of September. Then thereafter, we have the aggregate one, the entire Eurozone, taking into account of France, Germany, Spain, and Italy. So, and that will be released slightly later at 4 p.m. So for the manufacturing aggregated Eurozone flash October PMI, market is expecting almost the same, only a slight change to 49.5 from 49.8 that was previously in the month of September. So for the services Eurozone flash PMI data, market is expecting a slight dip as well, 51.1 from 51.3 that was printed in the month of September. Then after that, you have the UK one at 4:30 p.m. Manufacturing flash PMI and services flash PMI for October at 4:30 p.m. for UK. Then this is the all important, heavily anticipated core CPI data from US. So for the core CPI data or the core inflation rate CPI data, market is expecting no change at 3.1%. So that is also the same level of 3.1% printed previously in the month of August. So for the month-on-month one, the core month-on-month one also the same at 0.3%. So why this core inflation is important? Because the Federal Reserve will use this data to do their decision in the next upcoming meeting on the 29th of October, which is very interestingly the day where before President Xi and Chinese President meet on the on Thursday, which is on the 30th of October. So it's a day ahead before this two president meet up. All right. So market now is expecting almost 100% chance ahead of today's CPI data release that the Fed will do another 25 basis point cut on 29th of October to bring down it to 3.75% to 4%. So what market expectation is expecting for the CPI data based on the Fed Funds Futures trading price action is that the CPI data will potentially come within expectation. So market doesn't expect it to burst up to 3.3% or 3.5% on a year-on-year basis. So if it does, that will be a very negative feedback loop on the US stock market, and also the dollar strength may start to do a short-term push-up as well if this starts to disappoint on the upside, okay, more than 3.1%, because market participants now has heavily priced in a 100% chance that the Fed will cut, giving no big surprises on in relation with potentially no big surprises on this key US CPI data release later on at the timing, which is 8:30 p.m. Singapore time over here. And let's look down the calendar. Give me a couple of seconds to read it. Or for the next few meetings on what is the expectation on the Fed Funds Futures Traders price action will be. So the Fed Funds Futures Traders continue to assign a high odds of 92% that the Fed will do another third cut for this year to bring the Fed Funds rate lower by 3.5% to 3.75%. So that's another potential 25 basis point cut on the last meeting for this year, which is on the 10th of December 2025. And also continues to place high odds of 25 basis point cut each for 3 times in 2026. The first cut of 2026 potentially could come in on 18th of March at a high chance of 97% to bring it down lower to 3.25% to 3.5%, and another high chance to come in either June or July, 80%, 89%, to bring it down lower to 3% to 3.25%, and another high chance to come in at the end of the 2026 meeting, which is the 9th of December meeting, a 74% chance to bring it down to 2.5%, 2.75% to 3%. So market participants still pricing in a rather high odds that the Fed will continue its interest rate cut cycle at least 3 more times into 2026. All right, given that they are just expecting no big uptick surprise on the inflation print that are going to be out later in the US session at 8:30 p.m. Singapore time. All right, so then after the release of the US session print, you have this this will be much more important data. So there will be another data to look out for, will be at 9:45 p.m. will be the core, will be the preliminary manufacturing and services PMI data compiled by S&P Global for the month of October. So that will be out at 9:45 p.m. Singapore time over here. So all in all, that sum up today's daily dose of market insight. So do keep a lookout for trade related headlines again over the weekend, given that we still have the meetup that yet to be concluded between US Treasury Secretary Scott Bessent and Chinese Vice Premier He Lifeng ahead of that so-called confirmed meetup. That's the White House press has really confirmed that President Trump and China presidency will meet on next Thursday, which is the 30th of October, on the sideline of the APEC summit in South Korea. So do expect more potential headline news to come out that could induce more volatility to the global markets once market open on Monday. So the key important thing is risk management during this kind of fluid situation will be very much paramount, as well as technical analysis or fundamental analysis. All right, over here, I'm Kelvin here signing off. I wish you all a rather restful and we call it a great weekend ahead, and we shall speak again on next Monday. Thank you.